Morning everyone and welcome to Morning Markets. Today I'm joined by Matt Henderson, Portfolio Manager. I'm going to talk today about UK employment data. But firstly, Matt, just on yesterday's equities, positive performance in markets yesterday?
Yeah, another positive day on equities, Graham. So we've had, as you know, for the past 5-6 weeks, more positive equity performance relative to what we've seen for the rest of the year. So starting off in the UK, that was up marginally, 11 basis points. But in Europe and the US, we actually saw stronger performance. So European equities broadly up about 30 basis points, US equities up about 40 basis
and our
points.
viewers can see that on the ticker below, and it's good to see that momentum continuing. So to the UK employment data, what have we learned from this? What have you and the team been discussing around what you see in there?
Yeah, so data released this morning. Bit of a mixed bag. There's data pointing towards the labour market being slightly tighter. There's also data in there that shows it's going to slacken or weaken a little bit. So if we start with the tightness side of things, over the second quarter, we saw 160,000 jobs added to the economy, which is always good. And the thing that the Bank of England will be focusing on is actually the wage growth that we've seen during that period. So wage growth ex bonuses up 4.7%, which is much higher than what market was expecting. So just showing signs of tightness there.
Yeah.
But on the other side of things, where we're seeing a little bit of slowing of demand or a little bit of weakness, is actually within the jobs vacancy count. So it's the second month in the row that we've seen this fall off. So it's down to 1.27 million, which is obviously still a high level relative to pre-COVID levels, but just starting to see a little bit of slackness there.
Yeah, so good to see those wages growing, positives, and we've also got the inflation data tomorrow, which we can learn a lot more about. We'll cover that on tomorrow's Morning Markets. Also, China and lockdowns and the impact on the global economy. Do you want to tell us a little bit about that? I know the team's been discussing China this week.
Yeah, so China, obviously important, second biggest economy in the world, and we're seeing a different story over in China. So we're starting to see the weakness come through. As you mentioned, the zero COVID policy still in place there. So what we actually saw was weaker retail sales, which is more the domestic side of the economy. But we also saw a fall in industrial production, which is more linked to global trade, given China's a big exporter of goods. What's actually quite interesting for us as an investment team, though, is a region like China hasn't faced the inflationary pressures that Western or developed economies have so far this year. So what the PBOC have done, so the Chinese central bank have been able to do, is actually cut interest rates by 10 basis points in an attempt to support growth, which is something that developed market central banks might struggle to do given the inflationary backdrops.
And that's the beauty of the global diversification, which you guys work on. It's bringing everything together. So yes, we'll keep updated on that through the week. Like I said, we've got the UK inflation tomorrow, so we'll report on that tomorrow. Thanks for your time today, Matt. Appreciate that.
Thanks, Graham.
And also for our viewers, I'd just like to encourage you to subscribe to the True Potential YouTube channel, where you'll find our latest Do More With Your Money show, which was a Q&A with Chief Executive Daniel Harrison. So enjoy that, everyone, and we'll see you tomorrow for Morning Markets. Thank you.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.